following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the March 12th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, is something you and we must master each and every day. So let's begin our day with some empowering beliefs. It starts off like this. Don't waste a good mistake. Learn from it. Picture this. You're in the midst of a war, a battle between the limits of a crowd, seeking the surrender of your dreams and the power of your true vision to create and to contribute. It's a fight between those who will tell you what you cannot do, and the part of you that knows and has always known that you are more than your environment, and that your dream, backed by an unrelenting will to attain it, well, it is truly a reality with an imminent arrival, and that you want to be able to personally take responsibility for, folks. And I want to thank you for arriving here at TFNN, and I want to thank Basil Chapman for filling in for me yesterday as my system had the kibosh, had the modem, went down on me, and it made it virtually impossible to do the show out here. In fact, I was just simply going to go ahead and go through my newsletter. Heck, it's oftentimes the expanded version is about 70 pages and covers just about everything that you could want, so it would have been easy to fill in a full hour of that, but I just simply couldn't get online to do that no matter how I tried. So thank you, Basil Chapman, for filling in yesterday. And, of course, Basil's going to be up during the next hour, and he's also filling in for Larry today. So we got Basil for 2 hours. Folks, yes, I say don't waste a good mistake. Go ahead and learn from it. And I'm still trying to learn from yesterday's mistakes, trying to see if I can come up with a backup plan. And I think one of those backup plans is using my cell phone somehow as a hub to maybe to be able to get online and test that. But I got to check the actual power that would even allow me to do. In any event, folks, let's go check out these markets out here. Right now, we've got the Dow is trading off 52 points. It's trading out at 16,299. The S&P is down 7. It's trading at 1860.61. The composite is off 14 points. It's trading at 42.92. Russell 2000, everything off about 3 to 4 tenths out here. It's trading out at it's trading at 1182, off $4.50. The thing that we want to be paying attention to here today is going to be the SPY out here. And the reason is because as we speak right now, it's formed a little island. Now, it'll close that island if it can get to, at any point in time, gets to 186.75, near 186.70 right now. So it is trying to close that island. That is the only ETF where there could be a potential island reversal, but looks like right now the bulls are good. They don't want to see that. Why do they not want to see that? Let's see. If we closed it here, we just closed it. Okay, so that door has closed. We've seen 186.76 out here, and where I was going with that, so I'll show you anyways. The reason why these island tops, island bottoms are so important out here. So if you take a look at the gap up that we had between last Tuesday out here, we see quite a gap inside of the SPY because the high on last Monday's session was 185.45. Gaps up the very next day, the low of which is 186.75. That's where we were paying attention to that 186.75 level. Then what do? We trade sideways, in essence, to slightly higher for a period of 2, 4, 5 days out here. And this morning, the actual open inside of the SPY was at 186.32, so it gapped down. And if we would have created an island reversal here, as I pull the SPY back much further, the last island reversal top that I could locate inside of the SPY was right here. Right here on July the 7th, 2011. In fact, I think it was right at or near when I began doing the radio shows for Tom out here, or when I began at least doing a newsletter. I have to go back and really look at the records. In any event, it really doesn't matter to you, does it? What it matters is, hey, you don't have that island reversal, because that island reversal top here in July of 2011, that was a precursor as to the move lower that finally took place as we made a low, significant low in the marketplace back in October of 2011. There are some island reversal bottoms that have formed since then. You saw one that formed back in the time period of November of 2011. November, the actual date, between November 21st and November 29th. That's what formed the island. Then we saw a breakout of that. That gave us our move higher. We saw another junior island that took place in this chain of islands out here, March 6th, March 7th. Of 2012. We see another island reversal creating a good bottom here back in June. Remember, the low came in June the 4th. Well, there was a little island reversal pattern June 1st, June 4th, and June 5th out there. That certainly created quite a low. So we've seen some island bottoms here that have formed some real nice anchor lows. And so, that doesn't mean that there can't be one tomorrow, because there can, because we still have space here between the high of that session from March the 3rd and obviously this morning's low out here. So anything is still possible, but the island is not present. It's not present in any of the other ETF structures as well. They also had a opportunity this morning. They're going to may have another opportunity here tomorrow. We still have space in between the high of the candle from March 3rd inside the diamonds and this morning's low here thus far. Let's see here. We do not, in the IWM, that will not form an island reversal no matter what out here. So if we take a look at the IWM, see what it has done. The IWM now has come back to the breakout session. So the IWM broke out, wide price spread, accelerated volume, had everything, 112 million shares to the upside. And at this stage, what the IWM has done is it's come back to its breakout area. Now, it's not come back to the bottom, which is that swing point, which is what you'd like to see. Now, the volume on that is 50 million shares. So far today, you've done 10 million shares. Yesterday was pushing lower with only 48 million shares to the downside. The IWM was the weakest yesterday of all of the ETFs, in my opinion, was the weakest. If we take a look at futures contracts on different time frames, the IWM is one that we want to be paying attention to because it gave us the most strength here as of recent with that wide price spread and accelerated volume. So key is going to be, can it in fact hold the lows here from last Tuesday, March the 3rd, 115.58. At this stage, it's come back into that level, and it's done it with, we've been trading for about 45 minutes. Volume-wise, you've done 10 million, but that's not going to keep up the same pace. We'll just have to pay attention to this at the end of the day. If it is coming in with more than 50 million shares, though, that would not be a bullish sign out here inside of the market. So we'll be paying attention, but no potential for an island reversal. That's what was going to be. That's to me, it was the element that I was watching the most this morning, because was the strongest of patterns, meaning we've got a confirmed A to B equals C to the upside still inside the Russell 2000, was all of a sudden one of the strongest confirmations of an A to B equals CD. Was that all of a sudden going to be offset by a island reversal to the downside? And that clearly is not going to be the case inside of the IWM. Looks like that's the case as well for the Qs out here. So the Qs here, last Tuesday, moving down with 38 million shares. No island formation that's going to form out here. Today you are trading just inside that high, I believe, 89.91. You're at 89.91 as we speak right now. Yesterday's push lower was 24 million shares going against a breakout of 33 million shares. So we haven't totally seen the breakdown, at least as we take a look at the ETF structures. A little bit different when we go take a look at the wider swath of the market, and that is the New York Stock Exchange. Even today here right now, we're down with 848 net declining issues. It's the New York Stock Exchange that is leading the market down. Here, let me say that a little louder. No, I don't need to say louder. The New York Stock Exchange is leading the market lower. So it's telling us about the underlying weakness inside of the overall market. If we take a look at the New York Stock Exchange here, what did the New York Stock Exchange do? Well, it has created, I talk about a price relative out of strength divergent pattern. Inside the New York Stock Exchange, it also has divergent patterns, one being price moves higher on a price oscillator that is declining out there. And that's what we saw actually take place here the last several times as we saw some highs being formed inside of the market. A nice key reversal session, as you know, that took place here on March the 7th. Key reversal session, meaning that the prior session's high and low was taken out. Intercession, that the close was in the opposite direction of the trend. That means just simply a one tick lower qualifies, and you need to be in an extended condition, and most certainly the New York Stock Exchange was in an extended condition. Now, 10,387.17 is the number. The price oscillator now is below the zero line. The volume oscillator is below the zero line out here, and price is now back below the 2007 swing point high, 10,387.17. You are at 10,372.92. So New York Stock Exchange is going to be the little baby that we need to really keep our eyes on, because it's going to give us the most information about just simply the health of the marketplace out here. So the key level now to be watching inside of the NYSE is going to be 10,276.13. That is going to be the swing point low from last Tuesday, March the 3rd, out there, and that is on the New York Stock Exchange. A quick check-in here in the VIX index. The VIX is above the 50-day exponential moving average. It's off of its high out here. 50-day exponential moving average is at a price point of 1469. You're at 1503. So long as it closes above that today, that's giving you another bearish signal out here. So you're getting it inside of the New York Stock Exchange. Now the VIX index, again, it closed above 1469. That gives you the bearish message of the volatility index inside of the S&P 500. Let's go take a look at the index charts here. Let's do it using the Rhodes Momentum Indicator charts. Now, we've got the NASDAQ Composite. NASDAQ Composite, if I would have been on the air yesterday, I would have given you a figure right around the 4,300 area, 4,303. If we see a close below that, that would be a bearish sign. You can see we've switched to red. That is the sell mode signal inside of the Rhodes Momentum Indicators. Today is still young out here, but it closed below 4,303 today, and you're trading at 4,292. That is an indication on the daily chart now. So we're taking a look at a daily chart for the NASDAQ Composite. That's the strong hands of the marketplace. And that will be giving us an indication that that a change in trend is occurring here. So that's on the composite. Let's take a look at the Dow Jones Industrials right now. It's trading down 47 points out at 303. 16, really the 16,300 level becomes an important area. Close below that. That's going to tell us that a change in trend to the downside is underway. We did see bearish, but we've seen a lot of resistance up at its highs out here. Just simply markers by the bulls and the bears between bearish engulfing candles out here. So the number to be watching today, 16,300. You're at 16,302.70 as we speak right now. Let's go take a look at the Dow Jones. Take a look at the transportation index. Right now, the transports are trading down about 20 points. They're trading out at 75.39. They actually are strong inside of the market. They found some support here at the 75.07 number. In order for the transports to really get bearish, you're going to need to see a close below 74.59 or so, 74.59 and change. But right now, the transports, they've got their own set of resistance, but they are showing that they are not that weak out here. When we get back, we'll go take a look at the S&P 500, the XAU, and anything else you'd like. Just give me a call at 877-927-6648. Be right back, folks.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 44 points right now. It's trading at 16,307. S&P is off 6. The NDX 100 right now, it's trading at 3684, 3688. As long as it closes below that, that's sending off a very bearish message out here. Of course, if it closes at 3688, you'll also have a hammer candle that'll be forming. That says that the lows so far this morning here will be very key to watch. So far, the lows inside the NDX 100 is 3661.87, but a lot of time left in the trading session, so we'll see how today plays out here. But right now we're seeing a change in trend, which appears to be taking place inside the market unfold. We've seen that in the composite, seen that in the NDX 100, New York Stock Exchange as well, the NYSE, as we mentioned here, back below the lower part of the trading range, meaning back inside the 2007 swing points out here. So New York Stock Exchange gave us the signal here a few days ago. And it says that a change in trend is imminent, is in place out here. Let's take a look at the Russell 2000. We'll switch over to this stock chart at 2, telling us that as long as it closes below 1165 today, it's giving us a bearish message, a change in trend. How long it's going to last, that I can't tell you, but we're going to actually go take a look at the Euro-Japanese yen, and that'll tell us a pretty decent story out here. But we're seeing that, in the Russell 2000, after making that huge move last Tuesday, March the 4th out here, for this thing to actually now dip down and give us the bearish message that it is as we speak here this morning, that has got to make you say, something to think about. And that's on the index versus the ETF, the IWM. Take a look at the SOX index, the semiconductor index. This thing has been nothing but a sign of strength. This has not yet given any type of a true sell signal to me. That would be a close below 567.10. So it is going to. It's the bulls are fighting off the bears inside of the semiconductor out here. So that has some strength in it. The S&P 500. Let's take a look at. We're doing all this by taking a look at the Rhodes momentum indicators. Yes, right now it's in the caution zone, but you need to see it close below about 1860. I think is the number. You're at 1861 right now. Let me see, 1860. Yeah, 1860 would be good. So if we see it close below that, you'll all of a sudden. Now the S&P 500 giving you a message of being tired. Just take a look at these either dojis or narrow-bodied candles out here from March the 5th, from March the 6th, from March the 7th, March the 10th out here. Nothing but doji-style, small-bodied candles telling you the market is tired. You'll get, again, a close below 1860 out there. That'll be sending you a message of a market that's more than tired, a market that is getting ready to change its trend to the downside. If we take a look at something that probably hasn't changed its trend to the downside, that would be the XAU. So the XAU right now, it is trading out at what is it? Where did it go on my XAU? I'm looking at my screen here. 101.68 out here. So this is not giving us any kind of bearish signal, although it does have some resistance here. You've got a little shooting star from this candle that formed right out here on February 24th. So we know that the bears are camped out inside of the XAU out at a price level of 104.34. I had a nice little bear sash candle that gives you resistance out here on the trading session of March the 6th, that high at 103.47. So between 103.47 and 104.34, expect there to be some turbulence inside of the XAU. Let's take a look here at let me switch over. Let's go take a look at the Euro-Japanese yen. Let's go see what we have going on there. Give me a moment to switch over to that chart. With regard to, truly indicating the change into another, here's the coolest thing about this pattern, both for bulls or for bears out here. And that is this, that it not only did it go ahead and complete a 0.786 Gartley pattern, by complete meaning ahead of time, we knew what the projected price was that we were looking for, which is right in that 143.77 area. It got up to 143.778. The cool thing is that it's now a confirmed pattern. You see, in confirmed patterns, when these fail, so as you know, a 0.7, you know my expression, which is several of them. The way you do anything is the way you do everything. You should chomp on that one for a bit out there. Think about that and apply that to your life and that of others out here. If we take a look at the Euro-Japanese yen, when a 0.786 Gartley pattern confirms, that doesn't mean that price just got to that area, but confirms. This case here, it confirmed yesterday. We saw that bear sash, bearish engulfing candle that had formed. You like to see a little bit of follow through today, and that means any kind of lower close. So if you see that inside this currency pattern, it is an absolute confirmed pattern. That means if it fails, it'll turn into a butterfly. That is what the bulls want to see out here. The bears do not want to see that at all. We do not have that. That says that this currency pair wants to pull back, maybe 140.89, maybe 139.10, and that would put pressure on our stock markets. A change in trend being confirmed by the Euro-Japanese yen. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow off 31 points, S&P off 4 right now. Let's go check in on light sweet crude. It's off a $1.40 and change, trading out at 98 to 60-ish level out here. Now, I've got the daily chart. This is a continuous contract up on my screen out here. If we take a look at let's darken this up a bit here. If we take a look at coming off the swing point low, did I grab it? Nah, let me do this here. Let me grab the proper swing point out here. That's going to be the trading session from the low of January 9th at $91.24 out here. And we go all the way up to the high on March the 3rd. You can see you're trading below, maybe you can't see it, but you're trading below the 0.382 retracement level, which was 99.88. That says 96.58 is likely the number of where light sweet crude will go ahead and trade down to. It's another couple of dollars out here. Light sweet crude has passed a B point with lighter volume. The B point of an A to B equals CD down. Let's take a look at that pattern out here. Your A point being the high at 105.22. Your B point being the low at March the 6th. That low 100.13 makes a retracement, a one-day retracement. Your 1-to-1 A to B equals CD. We've almost hit it. 97.80, but the 1-to-1.272, that's what I would expect to see from an expansion standpoint. Maybe it takes place over the next couple days. 96.42. That also would set up your Gartley buy pattern out here. So this would be a Tiger Gartley because we have passed the B point with lighter volume. Now, you need to stay below that lighter volume, meaning less than 267,000 contracts in order for that to continue to be in effect out here. If we take a look at where the likely price move is, I'd have to say 95.63 to 96.42 would likely be the area. Now, what we have... That seems like the logical spot to me. Here is what the pattern actually colors out and looks like. So we've really got the range. Let me get rid of a couple of things out here. Get rid of the formation tool, and let me get rid of that too. There we go. So now we've got a clean chart out here. So somewhere around the 95.67-ish type of level, you got a nice 2.6 minute expansion of your B to C swing points out here. So that might be a nice little buy inside of light sweet crude. Now, that's around 95.67. So that's going to be, that would be really stretching it. Let's take a look here at the weekly chart. On the weekly chart here, 95.67. Let's remember that mark. Remember that. How about this? At 95.80. Okay, so you got to like that. 95.80 happens to be, this is a weekly chart, that happens to be the largest number of co-located opens and closes on a weekly chart, and that's really coming back all the way into 2005. So right around the 95.80-ish mark, that dark blue line, and that's what the A to B equals CD to the downside on the daily was projecting. I think it was like 95.67. And 95.67 or so is going to take us right down into the bottom of this rising price channel. So as we take a look at light sweet crude, been on a nice little gradual rising price channel. This low has been tested quite a few times because this channel's taken us back into the 2009 time frame. So unless if that gets broken and it closed below it, that changes the whole trend inside of light sweet crude. So you've got what looks like a Tiger Gartley pattern setting up on the daily chart. On the weekly chart, we're seeing both horizontal support as well as channel line support out there. That might be the next buy. Now, I had been looking at light sweet crude from a short standpoint. I'll go ahead and put this chart up on the screen, but I called that off. Now, here's the weekly chart again. Here's another weekly chart on my screen out here, and you can see what it also did. I'll get that out. What it also did was it made a 0.618 Gartley sell pattern. It had this nice little key reversal session here last week out there, which is bearish. Now, the reason why I was looking at it is because I analyze the commercial. I analyze the CFTC commitment of traders data, the COT data. Usually every weekend, I usually try to find time to do that. And what I had noticed inside of light sweet crude, as the commercial traders, they're presumed to be the smart money out there, and I would say that they are. They got to their largest net short position basically ever in the history of this data being compiled, which goes back to the 2006 time frame. And they accomplished that the week of February 21st out there. And then we had all the turmoil going on over in the Ukraine and in Russia. And the smart money, what the smart money did was, it did quite a bit for them to go ahead and build net short positions like that. And what the smart money did over the period of the next 2 weeks is, and this is obviously, I don't know what that data gets starts being compiled on Tuesdays, so the CFTC has already started compiling it. Unfortunately, don't release the information to the public until 3:30 in the afternoon on Fridays out there. But nonetheless, those the commercials came off of their short position like a vengeance. And so I just simply told my subscribers, you know what? We've been looking for this short trade. We've got a signal to take it. But when the big money moves off a position like that, I mean, they moved off of it quick. So to a certain extent, maybe there was some of that short covering, which we saw the spike up in light sweet crude on that daily chart, and maybe some of that was taking place as well. But they just simply were saying, you know what? I don't want to stand in front of what could be some chaos over. And that's my interpretation of the data. Forget about the fundamental reason. I can just tell you that from the strategic reason here, they were coming off of their short position without really light sweet crude having moved much lower, other than just from an intraday standpoint. These are big ships, so it takes quite a bit for them to either make their position, and they don't back off of a position as quickly as this. So it's kind of cool to see a Gartley buy pattern that looks to be setting up inside of light sweet crude, inside of that complex as we speak right now. So I think patience is a virtue for sure, and patience is where you need to be right now inside of light sweet crude. That's my best read on it as we speak. If we take a look at natural gas out here, natural gas trying to take out a swing point today. That swing point would be the low of February 27th. This happens to be the April contract that we're looking at, the low of 444, 4.44. We've been down to a low 4.448. That's versus 4.441. So we haven't taken that out. 166,000 contracts. You're hitting it today with 50,000. So it's going to need some giddy up and go juice. But if it does take out that level, that sets up an A to B equals CD to the downside inside of the April contract for net gas. That would take you down around the 380 mark is what I would project. $3.80 to $4 even Steven out here. If we take a look at bonds, a 30-year Treasury. Now, here's a beautiful chart for sure, because this shows you the long-term rising price channel that bonds have been in. It shows you where the good support is, and this support here coming off of the lows of back in 1984, in May of 1984. What's that price level about now? I would say it's right around the 126-ish type of level. So this is the monthly chart for bonds. We should expect to see bonds. We'll know if there's been a total change in trend take place if we see the low of this rising price channel get taken out, and we'll continue to pay attention. But that's the monthly chart. That's a longer term chart. If we look at the daily chart out here for bonds, what are we into the June? We're not into the June contract yet, are we? It's the lead contract June. Let me just go to the continuous contract out here. I believe that it is the June out there. We take a look at the bonds they have formed. Looks like a Gartley buy pattern out here. Let me do this. That Gartley buy pattern coming off of the lows here from, December 31st. If we use that as a low around the 127 level, all the way up to the high put in on February 4th, down to a low that was put in here on March the 7th. You're going to see a 0.618 Gartley buy pattern. Remember, 5 outcomes of every Gartley pattern out here. Let's see. It looks like outcome number 1, the dead cat bounce of 0.382 retracement level was hit. That's at the 132.1 level out there. If we take a look at silver, see what the high host silver is doing here right now. You got silver trading up 29 cents. That's up about 1 4/10%. Gold is also trading up about 1 4/10%. 29 cents silver, though. The 50-day exponential moving average is holding it, but it has not broken out above resistance out here. So just really, somewhat consolidating sideways. A little different story inside of Goldilocks, but Goldilocks here. Again, now today, hitting the top of this rising price channel out here. That's a rising price channel coming off that really formed back here in December of 2013. It's trading out at 13.65. It's trading up at this level on less relative strength. That's never a bullish sign, but volume, not too bad. 148,000 contracts, taking out 132, its most recent swing point, as well as the contract volume back on October the 28th, as it had formed a doji candle, which became resistance. That high is 13.61. Still a lot of time left in the trading session here as we speak right now. Let's take a look at the currency market. Let's look at the euro U.S. dollar. Let's go see what it is doing out here. Let's look at the daily chart for the euro U.S. dollar. It's above. It has broken out above its trend line on the daily chart. A clear break of its trend line. We have not seen the euro on a daily basis on a daily chart. We have not seen the euro break above this trend line that began back in 2008 out here. So the daily has broken above it. Did it with a nice wide-ranging bar. That was on March the 6th. We've seen price in essence come back and test that level, which was yesterday as it got down to a low of 138.32 out here. It's above resistance. It is absolutely above resistance. That's the euro U.S. dollar out here. That's on the daily chart. Let's look at the weekly chart. See what the weekly chart has done. The weekly is above resistance, both horizontal and diagonal. We truly may be seeing a breakout inside of the euro U.S. dollar. From a weekly standpoint, you'd like to see a close, as far as a breakout, a close above 1.3892. You're at 1.383.6 right now. So close above that level. That sets up a move up to the 142-ish range, but I'd have to say 144, more likely the price target. That's inside the euro U.S. dollar. Let's go take a look at the couple other currency pairs. Let's look at the pound. See what it is doing. Great British Pound out here on the weekly chart. It's above. It has broken out for sure. Let's take a look and see what's going on the daily chart. See if it's setting up a. There we go. So now we're setting up a nice A to B equals CD. Looks like it's pulling back into its rising price channel. This is on a daily chart for the Great British Pound. The A point on this is the high, that little spike high on February 17th. That was at 1.6821. Low out here coming in on the trading session of February 24th, out at 165.82. Retracement up into the swing point of March 7th. 1-to-1 A to B equals CD takes you to 1.6548, which will get you right down to the bottom of that rising price channel. So that is, in fact, where we might see some support. That might be really your next buying opportunity inside of the Great British Pound U.S. dollar. So we'll keep an eye on that. If we take a look at the U.S. dollar, Japanese yen, let's go see what it is doing. Not a lot. It made the 1-to-1 A to B equals CD to the upside. That was at 103.82. It got up to 103.75. It did that on March the 7th. We're seeing a bit of a pullback here. That actually set up a Gartley sell pattern, did it not? Let's go take a look at what that pattern actually formed here as it made its high. Yeah, it made a 0.618. Let's change this color here to yellow. So it made a, let's get rid of the A to B equals CD. Let's get rid of that formation tool out there. Let's delete that. There we go. So there you've got your Gartley buy pattern. That's the light blue pattern. That now has turned into a Gartley sell pattern, and that in essence is being confirmed here as we speak right now today. So where's that pullback take you to? Well, you remember 5 outcomes, 0.382. Well, that's the number that it's hit so far today. That low 102.60. You get below that, sets up a level of 101.89. That's in the U.S. dollar, Japanese yen. Let's go check in on some things here that are popping and dropping in the marketplace. To the upside here, we've got Intercept Pharmaceuticals. That ICPT is the ticker symbol. That is trading up $12.84 out here. This is trying to take out, looks like yesterday was a shooting star candle out here. This thing has been a rocket ship for sure, coming off of that low back on January 8th, which was around $71. You're at $451 here right now. So no way to really do any kind of price projection, in my opinion, on this stock chart. Just pay attention to resistance. Right now, that's going to be yesterday's high at 470.87 out there. That's on Intercept Pharmaceuticals. We've got Google to the downside. So let's go check out some of our core holdings out here, see how they're holding up here this morning. I mentioned, let's start off with Visa, because what has Visa done? We've talked about Visa, and we've talked about the resistance line set up by its gap down that took place here. Now, Visa is the number one weighting structure inside of the S&P 500, and this is important. So Visa gaps down on January 24th, does it with 4.2 million shares. The top of that gap, meaning the low of the prior session, January 23rd, 227.66. This has been tested and rejected and tested and rejected. connected. Let's count the times here. We've got 1, 2, 3, 4, 5, and yesterday was count number 6. Yesterday you had 2.2 million shares, again going into a downdraft of 4 million shares, about 50% the volume. Look, the bulls do not want to give up on Visa, but it is up against some pretty stiff resistance out there. Dow is off 63, S&P down 7. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is off 48 points right now. S&P is down 6. Composite off 9. Lead the charge on the way down here, though. It is the New York Stock Exchange. So that's the index they don't report on CNBC, on Bloomberg out there. But they do here at TFNN because that is important because it's the underlying health of or not such health inside the marketplace out here. So you got the New York Stock Exchange leading things truly to the downside here, giving us the signals that a change in trend is underway. Now, only 509 net declining issues here today. But let's step back for a moment. Let's see what we've got signal-wise and what's going on. First, I've got the ES Mini up on my chart here. The ES Mini has been traveling in a nice 112-point consolidation range, and it broke through that here on March the 4th. Big wide price spread, accelerated volume, the whole kit and caboodle. So it broke through that 112-point consolidation level. That says that its target would be 1957. So we're seeing a retracement in the marketplace. We've gotten the signals here as we take a look at the New York Stock Exchange. Now, inside of the ES Mini, not until it breaks back inside the consolidation will it provide us with any real bearish signal out here, because if it does that, then you can go ahead and move all the way back down to the bottom of the consolidation. So that says 1846.50. That's going to be very key for us to be paying attention to. 1846.50, not only does it bring you back price-wise into the top of the consolidation pattern out here, which would just be another test of that level, it also brings you right back into that breakout session that we saw take place here on March the 4th out there. So that's going to be an important area for us to be paying attention to. That's what the daily chart for the S&P futures is communicating to us. If we go take a look at the intraday chart, if we take a look at the NASDAQ futures out here, the NASDAQ futures made a 0.786 Gartley buy pattern. We have had a bullish engulfing candle that has taken place here. Now, this candle session does not end until 12 noon out here, but as we speak right now at 10:56, you've got the bulls out here. It did break a hammer candle that took place at 8 o'clock in the morning. The 0.786 level to the downside is holding as support, just as the 0.786 retracement level to the upside held as resistance out here. Inside of the 120-minute chart, you've got a 96-point consolidation. Not until the NASDAQ breaks through 36.37 will that indicate to us that we've got a real crack in the market. That would be 96 points lower. That's your measured move. Remember, you break a consolidation and your move is equal to or greater than the actual consolidating pattern out there. So that is another thing that we will pay attention to. You've got the VIX index, as it is above the 50-day exponential moving average, and right now it's kind of like trading right on it. The number is 1468. Yesterday you closed right on the 50-day moving average, exponential moving average. Right now you're trading at 1478. A close today above that level is an indication that is where your carnage is done inside the marketplace. So you want to be paying attention to that. If we take a look at the Euro-Japanese yen out here, this is the currency pair that leads the market. It gave us a nice confirmation yesterday with a bearish reversal signal. It gave us that bearish engulfing bear sash candle out there. That says that high of 143.77 is very important. The bulls want to see that taken out. Why? Because then that leads to a butterfly pattern, and the markets will rock higher out there if, in fact, we see that take place. But right now we have to go with the pattern that is out there. You've got a 0.786 Gartley sell pattern. The first objective has not been met. This market wants to move lower. We've got the New York Stock Exchange as an additional element. The New York Stock Exchange, the price oscillator below zero, the volume oscillator below zero out here, and that says that we are in store for a pullback. So we should expect bounces in the market. We're short inside my newsletter. We are going to add to our next short position on a bounce inside the market. That's what I said this morning. Those are the patterns setting up at 7 o'clock. It is no different right now. Folks, stay tuned. Basil Chapman is going to be with you for the next couple hours. After Basil, we've got Daryl Martin, then David White, and the Tom O'Brien Show from 4 to 6. And thank you, Basil, for filling in for me yesterday. I really appreciate it. Look forward to being with you again tomorrow. Have a great Wednesday, folks. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.